Hey, welcome to Everyday Economics. This is the podcast that helps you understand the economic world going on all around us. Everyday Economics is brought to you by the Center Square Newswire service. I'm Chris Krug. I'm publisher of the Center Square. And Orphe Divounguy is my partner on the show. He's a PhD economist. Today is Friday, May 8th, 2026. And in this episode, we're going to talk about the housing market. Hey, Orphe. Recent headlines anyway, out of the Seattle Times and reports from YouTube analysts like Michael Bordenero are painting a picture of a market that is physically locking up. In King County, specifically, active listings are up 30%, but prices are down about 5%. We're seeing homeowners who are handcuffed by 3% mortgage rates. I'm not sure that handcuffed is exactly the term I put on that, but they're refusing to sell and instead becoming accidental landlords just to keep their cheap debt. At the same time, the condo market is becoming a trap as HOA fees and insurance premiums are going up. The just build more supply narrative is being challenged by the reality that nobody can afford the dirt at 7% interest. It looks like a standoff where the seller's ego is finally meeting the buyer's empty wallet. Does the data suggest that this is a healthy rebalancing, or are we looking at a fundamental break in the dream of home ownership?
Yeah, I think that's interesting. I saw the the YouTuber, and he's actually a real estate agent. So I saw the video, and I think he's right about the symptoms. I think he's wrong about the diagnosis, though. Affordability is bad, yes. Renters have more leverage than they had before the pandemic. That's true, too. We've had a big increase in apartment construction that has helped cool rent growth, elevate the vacancy rate. The condo costs are a real issue. Mortgage distress is rising, but it's rising from a very low level, right? So a lot of what he says is true. That's what he gets right? The affordability challenge, the fact that renters have more leverage, the fact that mortgage distress is rising. I think what he misses, though, is that affordability is actually improving. Mortgage rates are 40 basis points below where they were a year ago, and incomes are rising faster than housing costs. And so things are actually headed in the right direction, not in the wrong direction. We have more inventory than we had a year ago, but that doesn't mean we have too much inventory. If you look at the latest Zillow housing market report, we had about 1.3 million homes for sale this April, up about 4% from a year ago. But if you look at the number of active listings on the market, still roughly 19% below where it was before the pandemic. And that's why prices haven't corrected nationally despite weak affordability. Existing home sales are weak, but that's partly because sellers are missing from the market, right? Where there's more inventory, sales have actually increased modestly. In Austin last month, we had an 18% year-over-year increase in existing home sales. Mm-hmm. Dallas, 8% year-over-year. Raleigh, 8% year-over-year. San Antonio sales are up 10% year-over-year. It also helps explain why new construction home sales are up 3.3% year-over-year.
Yeah.
Right? So where you see more housing inventory, you actually tend to see an increase, at least modest increase in more places, increase in home sales, right? So the fact that sellers aren't selling is really the bigger problem here. Good homes are still selling quickly, right? Nationally, 1 in 5 homes went pending in just a week last month. And so, and the typical home stays on the market for about 17 days. Mm-hmm. Right. So the pace of home sales pretty good. Right. So why don't we see a bunch of, an increase in home sales nationally? What I said before, which is basically there's just not enough homes for sale. You can't buy what's not for sale.
Yeah. I think the incentives for the people that are already in a home, if you've got a mortgage and your mortgage is sitting around 3% and you're looking at, a voluntary move, a move that's not being predicated by, I got to move from Pittsburgh to Raleigh or from Nashville to. I mean, why would you sell in this market? Because that money's so expensive right now.
Exactly, it's a life event that will get you moving, right?
Right.
and we've been there the last couple of years. The people who are moving are basically moving because of life events. But ultimately, most homeowners are sitting near record home equity. They're not facing much distress at all. They are kind of waiting it out patiently because they have a low mortgage rate. And by the way, during the pandemic, a lot of people also did a lot of like upgrades on their homes and just fix things up. And so they they're sitting it out, right? They're kind of waiting on the sidelines. I think fundamentally that's the biggest problem we have in housing today is that the lack of listing. Turnover is low because people are not selling, and of course we were hoping new construction would kind of fill that gap. It really hasn't all that much, right? It's a new construction increase during the pandemic, but just it's homes an increase of 3% year over year. Okay, it's improving, but it's still moving. But inventory is moving, but it's not great, right? And the reason it's not great is because, of course, they're having to give away, do price cuts and give away incentives to move homes because affordability is so challenged. So yeah, I think most people, the analysts I've seen, they get it right. There's an affordability challenge, but ultimately the only way to fix the problem is to get more homes on the market. If we had more homes on the market, inventory would rise further. We'd get a bit of a price correction, which needed a healthy price correction that will get housing moving faster.
Well, let me ask you this. I mean, as far as it goes with, with the new build, we've had an ongoing conversation inside of Everyday Economics now that goes back 3 years. And we've talked about the gap between the number of houses that exist or the number of homes that exist and the need, right? But let's just say, and when you've estimated that number somewhere in the neighborhood of like 4 million, we're like 4 million homes short of where we need to be. But let's just say that, that like builders, really turn the machine on. And if we suddenly built like 1 million new homes tomorrow, would it even matter to the market with regard to getting people into homes if the mortgage math still doesn't work for a family making the median income or somewhere in the ballpark of the median income?
It does. I'll tell you why. Because prices go down. We've had flat home values over the past year. Home values are basically flat on the year-over-year basis, and income growth has now outpaced price increases. And so when income growth outpaces price increases, total housing costs, you combine prices, but also the small decline in mortgage rates. Remember, mortgage rates are 40 basis points below where they were last year. You combine those two things, and affordability is actually improved. The typical mortgage payment is about 4% lower than it was at this time a year ago. Right. So it's improving. Right. And the fact that we have more homes on the market for sale actually helps to improve affordability. Right. Yeah. So fixing affordability means basically getting more homes on the market. And I think that's the thing a lot of people are kind of missing. We need more homes on the market in order to fix affordability. Those two are connected. So that's the important point. You could see it in Austin, Texas, where home sales are up 18%. 18%, I said it. 18% year over year. Remember, people were saying Austin is dead. People are leaving Austin, blah, blah, blah. The price decline in Austin over the past couple of years, due to a massive surge in housing inventory, has helped to improve affordability. And now we're seeing sales actually increasing double digits in the Austin metro area. Right? And
Austin benefited, of course, from a building boom. I mean, like a recent building boom. And you've had a lot of people that have touched base in Austin and said, well, maybe it's not for me. And then they've gone somewhere else. Maybe back to where they came from.
Listen, all of a sudden, you're seeing Austin picking up steam again. Dallas, San Antonio, Raleigh, North Carolina, places that built a lot of housing are the places where you've seen the big increase in inventory, where you saw some price declines, right? Phoenix. And then affordability has improved as a result. And that affordability is getting buyers to buy into homes. It's fantastic. That's how markets work. Last but not least, people are concerned about delinquencies, right? Delinquency rates are rising, but the stress is still nowhere near the levels we've seen before. It's you're looking at maybe pre-pandemic levels in terms of serious delinquency. So we're you know, you don't have a lot of forced sellers out there, right? For the reasons we highlighted, most sellers have very low mortgage payments. They're sitting on near record home equity. Part of the reason we're not seeing a lot of sellers come back in the market also, right, it's not just that they have low mortgage payment. It's also that when they come in the market, they don't really want to cut the price all that much.
Mm-hmm.
They, you know, in fact, when you're looking at the market right now, builders are more likely to cut prices and offer incentives than homeowners trying to sell their homes.
Sure.
And so they're not really willing to give up very much. The share of listings with price cuts is actually down compared to a year ago. You're not seeing a lot of sellers coming into this market and selling, hey, I'm willing to cut the price a little bit, or they're not as willing to make the price adjustments. That's probably why we're not seeing a lot of seller activity, as much seller activity as we really need to see. I think sellers need to, and I think this is the point I agree with this real estate agent on, you know, sellers need to come to grips with the fact that the market is not the one it was during the pandemic. Okay. We got used to a super hot pandemic market, right? And things are just back to normal. There's a market normalization that took place. We're back to normal. We're back to homes selling in 17, 19 days in April, right? Which is just about normal. You know, if you compare to 2019 or 2018, we're back to 1 in 5 homes selling within a week, which is also back to roughly normal if you compare the market to 2019, 2018. So the market is normalizing. The only issue is we have less volume, right? We have less volume because there are fewer sellers willing to sell their homes.
Well, thanks as always, Dr. O. I appreciate your thoughts. Make sure you read Orphe's Everyday Economics column on Mondays at the Center Square and listen to what we have to say every weekend on the Center Square Radio Hour.